But regardless of whether you're using the same risk reward areas as everybody else, you always want to try to give yourself more reward than your risk, obviously. And again, you have to stick to those levels. A decent risk to reward level is 2 to 1 or better. And that way, if you think about it, even if you're only correct half the time, you'll still be profitable in the long run. And so it's about sticking to your plan. You have to know your plan before you enter into the trade. And regardless of what your strategy is, different strategies are going to have better accuracy rates. They're going to have better risk to rewards, and you want to use that to kind of base everything around. How accurate is your strategy? If your strategy is extremely accurate, you can probably get by with using a little bit worse risk to reward. And so I just mapped up today's trade as an example. If you look at my entry here, my entry with the VWAP fade, I think everybody kind of knows the VWAP fade strategy that I use. If I get in here, I could set my risk up here at this level here. Why is that my risk? Because you can see in pre-market, it bounced off of that level 3 times. Here, here, and here. And so it's very obvious resistance. That's going to be my resistance level. If it breaks over this area because previous support turns into resistance and vice versa, then I'm just going to exit the trade. But I have a defined risk from my pre-market, data. You can see here again, it bounced off of it here, here, and here. And this level, I think it was either 683 or 783. And so I plan to enter the trade here. And I think I entered it at 673. That gives me a 10-cent risk, judging it off of these previous levels. And so my risk is 10 cents. And then I set my reward going back to half or whole dollars. In this case, I think it was actually 650. And why did I set my reward there? Is because you could see in pre-market, again, it bounced off of that level.
So now when we want to talk about, when we get into risk and reward, really the key is going to be on where do you want to set yourself up for break-win rate. What I mean by break-win rate is when you get that break-even, that way you're not going to really be making money, but not losing money. So really this is the real key. I mean, we all want to be profitable. We all want to make money. So how we're going to make money here is by always trying to get a better reward than a risk. There's many strategies out there. There's a lot of scalping strategies that are going to claim to be, 83% accurate or 75% accurate, but this is very, very hard and very limited. A lot of times you're going to have to go to more of a trade that's going to be on the other side of the spectrum where you only got to be right 25 or 33% of the time. And these trades would be risking that 1 to 2 or 1 to 3 on the reward side. We at beginner trading, we try to use that 3 to 1 and 4 to 1, but anything really over 1 to 1.5 is really sufficient enough to go ahead and continue getting. One of the key things that I do is I base my reward not only on what I need on the risk to reward, but also based on important levels.
Right, and you want to be on the bottom of this list, right? Because it shows you if you set yourself a 50 to 1 risk reward ratio, you have to be correct 98% of the time. And you're never going to be right 98% of the time. I mean, I guess it's possible, but it's pretty unlikely. And you can just see how it goes down. But the point is that you want to be on this bottom half. You at least want to be getting in 1-to-1 trades. Because then you have to be right 50% of the time. As it goes up, you have to be right less to still profit. And so if you give yourself a 1 to 2 risk to reward level, you only have to be right 33%. If you give yourself a 1 to 3, you only have to be right 25%, and so forth and so on. And so it's important to be on the bottom half of this chart, on the bottom half of this graph here. Because if you're on the top half, that means that you're not giving yourself enough room to profit.
Yep. And as this chart says here, most beginning traders here are 50% winners. Our strategy is really just trying to get you to be like 50% accurate, because if you consistently do a 1 to 2 or 1 to 3, and you get 50%, that itself is going to go ahead and give you that profit. You're not going to be break even, but in the profits and in the green. So that if you're anywhere near 60% and 70%, you're going to really start seeing an increase in your profitability. And that's where we really want to be.
I can just use today's trade as an example. So if you look at today's trade on NVEV, when I look at this chart, the first thing I want to do is map out where those support levels and resistance levels are. And if you look here in the pre-market action at around 685, 684 is where all the support is. You can see it bounced off of it. Let me get the arrow out. You can see it bounced off of it here, here, and here. And so you can see that area at around 684, 683, 685, that area is acting as major support. And support typically turns into resistance. It's kind of technical analysis 101. And so when I jump in this VWAP fade up right here, you can see it fading off the VWAP, I'm going to use this area as my risk. And so for instance, like I said, if you get in around the VWAP, I think I got in at 673 here, I can set this level as my risk, giving me about a 10-cent risk. Okay, and then the next thing you want to do is map out your reward area, where you're going to take profits. And like I said earlier, half and whole dollar areas are significant. You know, those are levels you want to look at for your risk and reward. Not solely those levels, you also want to look at where the other previous support levels are. But if you look at this chart, I can say a pretty obvious area to act as my reward would be the next low of the day, which is also the half dollar, which is also where it bounced off of in pre-market, so the 650 level. You know, I think I got out here at 655, but again, you can see if I get in here at 673 where I did, just to draw it out, and I'm going to erase some of these other charts just so you can see. You can see my risk area is, let me find a good things to do. My risk level is here, and my reward level is all the way down here. And so my reward is more than 2 times my risk if I got in at 673. And so, you know, one habit you want to get into when you're trying to calculate risk to reward is you want to just map out the big support and resistance levels in pre-market. You know, so for instance, you know, you can map out this level. You can see this level was significant resistance here. You can see it bounced off of it here, here, and here. And so I can draw a line there and use that area as major resistance on this chart. And again, it bounced off of here, here, and here, so I can draw this line there, and that's major support. And so like I say, support always turns into resistance, and resistance turns into support. And so you want to use that to analyze the trade and see where you're going to have more reward than risk in this trade. And so like I said, this is my reward, this is my risk. And so like I said, you want to look at the history of the chart and try to use that to determine it. But again, you know, half and whole dollar levels are probably one of the most significant levels. Why are they the most significant, or one of the most significant? Is because that's what all the other traders are watching. You know, traders have different strategies and patterns and trades that they do, but most of them are looking at half or whole dollar breaks. And so for instance, if you watch the trade today, you know, one thing I was looking for with this trade was, I remember I said I was waiting for it to break under this half dollar right here at 650. You know, I said if it does break under this half dollar at 650, this area is going to turn into resistance and it's going to get a massive push down. Why is that going to happen? Is because some traders are just shorting this at the half dollar. They're waiting for it to break under the half dollar and they're jumping in short. You get this big volume spike on this chart. Let me fix this a little bit so the volume doesn't overlap. You get this big volume spike in the chart. Let me pull this up. You get this big volume spike in the chart when it breaks under this half dollar right here. You can see the volume start to spike up much higher, twice as much as it was previously, and you get this big rejection down. And that's because all these traders are looking at this stock, waiting for it to break the half dollar. When it breaks, they're either selling out of their long position because it broke under that support, and so it's kind of their cue to jump out of the trade, or they're jumping in short just like I was holding it today. And they're jumping in short, and that's causing the stock to push down. That's causing the volume to spike up, if that makes sense.